US prosecutors have launched a criminal investigation into Fed Chair Jerome Powell, making the markets nervous. Gold hit a new high this morning while the dollar fell after the Justice Department threatened Jerome Powell with a criminal indictment over the $2.5 billion renovation of the Fed's headquarters. Powell released a video statement on Sunday saying the threat was not about the renovation. It was, he said, about the Federal Reserve setting interest rates based on what will serve the public rather than the preferences of the president. Vicky Pryce is Senior Economic Advisor to the CEBR. Vicky, this is a big step up in the rhetorical war between President Trump and the Fed. Should markets now assume the next chair will do exactly what the president wants and cut rates significantly?
One would imagine that there will be a new Fed chair at some point who's going to be, more keen to do, or at least, accept what President Trump would like them to do. So yes, we might see rates perhaps fall faster in the future. But of course, there is a governing council, and so the Fed chair isn't the only person making a decision on this. So a lot will depend on what happens to inflation over that period. We're getting inflation data, of course, coming out from the US tomorrow. So we see whether, the improvement that we saw, surprisingly, the latest data is maintained. But yes, I think the pressure will be there. And it has actually sent a bit of a sort of shockwave across markets, that spat, which is now becoming a little bit more than just a verbal spat. It's becoming a little bit more serious, and there is an issue about what happens next.
What are the larger risks, Vicky, to the financial system if the president is seen as trying to dictate policy?
But independence of the central banks has been a very important part of keeping the financial system sort of stable up to a point, and also, of course, we've had lots of ups and downs. We had crises after crisis, and the central banks have had to respond. But the general belief has been that the central banks have responded in a sensible way, looking at evidence. And I think what Joe Powell himself was saying in his own statement was that what the president is trying to do is move the Fed from looking at data and evidence to political pressure. And that, of course, means that you can't actually be certain what type of policy we may have in the future. And that, of course, is very unsettling for the markets.
What about the impact of that uncertainty on US borrowing costs? Might we see international investors reduce allocation to US debt?
For the moment, we haven't quite seen that happen in the bond yields in the US, because there is still a lot of money floating around, and there is concern as to where are the safe assets across the world, and there aren't very many places one can go to. But you have seen certainly a weakness in the US dollar as a result of what's been happening, and a strengthening in the pound, in Swiss franc. We've seen it even more widely, that there has been a sort of weakening of the dollar as a result of this. But of course, that could be more to do with the expectation of lower interest rates, of course. That could come rather than perhaps disenchantment with the US more generally. And of course, as we know, the US is still offering all sorts of incentives, or threatening all sorts of negative things for firms that don't do what he wants them, or so President Trump would like them to do, which means that a lot more investment is quite likely to still be happening in the US in the coming years while he's still there. So the demand probably for stocks and also for government debt will be sustained. But stocks, of course, as we've seen the futures for the US today, are coming down a little bit in terms of prices. So there is certainly a worry ahead.
These worries about Fed independence were, of course, part of the narrative driving the dollar down all of last year. Could this go much further? And where else might investors be looking for safe havens if they have got nerves about the US?
I presume the UK is going to be looking at ways in which it can attract more funds coming into here. But also we have seen, actually, you're quite right, over the last year, a move of funds into Europe more generally. And that has been sort of quite positive, especially given that Europe is going to have to borrow an awful lot to spend on defence. So that could be an area. But of course, with all the geopolitics around, there's still a huge amount of uncertainty. But what we're also seeing will be a look at what other banks are doing, and comparing the US with, say, the European Central Bank, which has got a lot more independence and can actually even dictate its own target for inflation, and also add all sorts of other things if it wants to. if indeed the US starts losing that type of independence, then I think the investors will have to look again and see where perhaps it is safer to put their money.
That was Vicky Pryce of the CEBR. Don't forget you can watch more videos on Reuters.com.